Good evening, Mr. Cooper. Good evening, all.
Hello.
Hello. It gives me great pleasure to introduce you, Mr. Cooper, a remarkable venture capitalist and leader. At this instructive talk session, Mr. Cooper, who is from Sao Paulo, Brazil, is well known throughout the world. He completed his studies at the Wharton School from University of Pennsylvania, serving as the managing partner at the Airborne Ventures and a board member at Rabbit, Skywan, Beep Saude. Apart from his professional achievements, Mr. Cooper has demonstrated his commitment to helping people in need by being a sober professional friend to business executives. Welcome, Mr. Cooper.
Thank you, Gargi. Pleasure talking to
Yeah.
you. And it's a pleasure being here and sharing a little bit of my story with the audience.
Yes, sir, absolutely. It's our pleasure indeed. Taking forward with the questions. Yes, sir.
Sure. Let's go.
Yeah, okay. Taking ahead, let's ask questions to you to know more about you. Talking about your personal journey, would you share a pivotal moment or experience that solidified your passion for venture capital?
Sure. Well, the moment that I realized that I will start my career, that was it actually became about 10 years ago. I was an entrepreneur
Okay.
in a tech company. I was I was I was a founder of a rocket Ethernet company here in Brazil. I went to Germany, learning how to operate the company, and then I came back to Brazil, and I started, running. And then I realized that running the company is very new, it's very interesting. And I love doing
Mm-hmm.
that. Uh, I have been an operator since then. I've been a management consultant, been corporate executive, banker before that. But the thing is, the entrepreneur took me to the tech side. I was
Okay.
astonished. After a few years in this company, we decided with a set of founders from the market, we decided to build our own venture group. It was another level of entrepreneurship. Being a venture
Mm-hmm.
builder, it's it's like being a venture capitalist plus entrepreneur because you're deciding on how to allocate the resources, but you're also building it at the same time, which brings. I met a lot of entrepreneurs during this thing, and one of them told me once that being an entrepreneur and being a venture capitalist is like a exercise of discipline. Because you're doing this essentially the same thing. You're allocating resources, but in two different levels, and that actually uh, kind of got into my mind. I said, "Oh, that's very interesting." And then I started allocating capital into startups as an investor, not only as a builder. And then I started transitioning into a venture capital. And that was around 2015. After that, I performed about 70 investments, 20 to 30 angel investments in 2 to 3 years. And then I went to run one of the largest CBCs, the second largest bank in Brazil. And
Mm-hmm.
after 4 years on that, uh, $200 million, I started my own farm, which is where my parents like deployed and it's a 15 companies. So that's pretty much what I did.
Okay. All right. Okay. Like in your entire journey, were there any mentors or individuals who significantly influenced your career path or guided you along?
Yes, there were many of them, to be honest. This entrepreneur,
Mm-hmm.
what I told you that invest in
Yes.
viewing or the entrepreneur is the suicide of the same. It's
Mm-hmm.
actually someone that I have invested. and it's pretty interesting because he used to be an investor himself. He did the opposite. He became career as a VC investor and then became entrepreneur.
Oh, pretty
And
interesting. Yeah.
yeah, and so we were always trading ideas. And I was helping him with the entrepreneur side, and he was helping me with the VC side. So
Mm-hmm.
we are both mentors to each other. Uh, he helped me a lot in my first years as a professional VC, especially deal terms on how to win entrepreneurs and how to know and how to navigate the VC arena. That was really
Mm-hmm.
important. The other thing,
Okay.
the other mentor that I have is the was my first partner slash GP on the Renewable Ventures. But he he's the one who brought me to into this world. Why he was so important? I met him a decade before, actually almost 2 decades before,
Mm-hmm.
uh, and he also helped me navigate throughout the bank
Mm-hmm.
how I could make things happen inside the bank. And that was really important
Yes.
to understand and to better navigate in terms of politics, how to fundraise inside your
Mm-hmm.
own organism.
Yeah, indeed.
So that's the two mentors yeah, but
Okay.
the people I rely most, to be honest, tend to be the founders rather than the seeds itself. Because the founders
Mm-hmm.
to offer the more honest, you know, because they to be more on the fire rather than the VCs. Many of the VCs they tend to be on the comfort zone,
Yeah.
and the advice they give to the other VCs,
Mm-hmm.
it's it's more like come with me, learn the trade.
Mm-hmm. Okay. Mr. Cooper, are you there? Mr. Cooper? Mr. Cooper?
So the found unless it's
Mm-hmm.
the VC is the founder of the firm. It's a better job.
I think there is a bit of a network issue at your end, Mr. Cooper. Yes. Uh,
Hello, Margie.
yes. Am I audible? I think there's a bit of a network issue from your end. You got pretty much broke in between and then couldn't hear you. Hello?
No, could you get the final thoughts?
Okay, okay. Okay, you can hear me properly, right?
Yes, I hear you perfectly. Did you get my final thoughts?
I I did get it, but then in between it was broken. Maybe there's some network issue at your end, I guess.
Sorry about that.
That's entirely fine. Okay, so moving ahead. You already talked about your personal journey and the inspirations that you took from. Talking about the investment philosophy that we talk about, when evaluating startups, do you prioritize disruptive innovation or focus on proven markets with potential for optimization? What's your thought on that?
It broke a little bit. I think I lost part of your.
Yes. So I was just trying to take out about the investment philosophy that you guys put in while investing. So when you're evaluating startups, do you prioritize disruptive innovation or focus on some proven markets with potential for optimization for your investments? How do you see it?
That's a good question.
Yeah.
Well, it depends on the opportunity, but I rather
Mm-hmm.
be on the assumption here in the market I operate more
Mm-hmm.
opportunities for development. If you focus on companies that are covering
Mm-hmm.
gaps or improving the gaps, they have so many opportunities, and these opportunities can create billion-dollar companies. You don't need to reinvent the next Google or the next Facebook, or the next Tesla.
Mm-hmm.
For you to um, find a company that you
Mm-hmm.
asking one thing. I think it's both a safe way to get huge markets, and also yes. So
All right. So, going ahead, how do you balance the potential for high returns with the inherent risk associated with your early stage ventures? Yeah, like how would you balance the high returns with the risk that is associated with the early stage ventures?
sorry, I couldn't hear you.
Well, I was asking how do you balance the potential returns and the risk associated with it with the when it comes to early stage ventures?
The potential of that's the last thing that
Mm-hmm. Could you hear me? I think there is a network issue with losing you in between.
as you said. How do I balance the potential
Yeah, like how do you balance the potential for high returns with the inherent risk associated with the
of
early stage
what?
ventures? So I think we're losing you.
Question at the beginning.
We can't hear you, sir. Mr. Cooper? Uh, Sir?
So I think I'm hearing you again. Can you hear me now?
Yeah, now I can hear you. We're just losing you in between, so we're getting a tidbits of what you're saying, but not entirely.
Yeah, well, I asked you to do the question again from the beginning because I just heard parts of the question, so I don't
Oh,
actually know what you asked.
oh, absolutely, sir. I can repeat it. I was asking, how do you balance the potential for high returns with the inherent risk that is associated with the early stage ventures?
Oh, very well, very well. Uh,
Yeah.
in terms of high returns of these companies, the way you
Mm-hmm.
have to address that is by building a portfolio that will both have 10 times and
Okay.
also avoid the zeros.
Okay.
Try
Mm-hmm.
to have as a portfolio, but that's a very uh, high level way of portfolio
Mm-hmm.
building. Okay, so in a more micro, or if you go in depth or the next level, what you have to, or the way I do
Mm-hmm.
is, I have to look at the opportunities. First of all, I have to get into the opportunity very early because that's the one way that I can foster. And when it actually bloom, when the company is mature, I have entered uh,
Mm-hmm.
in a very good price, and it will be valued like 20, 30, 40 times as much. So that's the one of the strategies. And the companies, they not only have to be small, but they have to have
Mm-hmm.
the potential to become big companies. And
Yeah, absolutely.
this goes back to a series of factors. Uh,
Mm-hmm.
the problem they're trying to solve, the team, business model, these together with these variables together, they will give us an idea of the potential of this opportunity. A few examples: if the market isn't big enough, or
Mm-hmm.
if the market isn't good for exits, you may invest in a company founders probably will to get out of the investments. So
Mm-hmm.
as a business model, right, they can grow. But for them to grow, you're gonna need lots of distribution centers. This in turn will put a lot of pressure in the business, in the founders, which will take two things. Either the founders have to be super good, which is normally the case,
Mm-hmm.
or the company will take a lot of time to get there. If the company takes a lot of time to get there, it's not a good investment. So sometimes the business is good, the company might be good, but it's
Mm-hmm.
not a good investment. So you have to skim out all these false positives uh, out of the equation. So
All
this,
right.
I think this sometimes is the worst part. Sometimes you say no to a company, not because the company is not good, simply because their investment prospect is not uh, is not good for investment perspective. This is how we view portfolio. Or sometimes the
Mm-hmm.
risk of the company going broke is just like a 0 or 1. I know
Yeah.
you asked me, it was more like destructive innovation or something that you're gonna drive
Mm-hmm.
more. If you go to a and another thing that happens is that if you look at the top quartile disease in the world, they have very few zeros.
All right.
Of course, you have to understand they have few zeros because they manage to sell the companies to someone or because the companies actually
Mm-hmm.
they bring some back. Uh, that's part of the stress.
Yeah, absolutely. Moving ahead with the next question. How do you see the geopolitical landscape impacting the venture capital industry, particularly as you come from Brazil? So, how are the emerging markets in Brazil different from the rest of the world? Or what is the geopolitical landscape out there for venture capital industries?
Yeah,
Uh, yeah, so we were talking about the misconceptions of entrepreneurs uh, while they approach VCs. So that was the last talk that we have had.
Okay.
Okay,
So
so that was, I think, the network went on that, I guess. So could you repeat that?
sure. So I was telling that the inter the the less experienced entrepreneurs they
Mm-hmm,
they tend to most of the times they tend to underrate the relationship they're gonna have with the investors. Uh, they sometimes they don't understand the relationship they're gonna have with the investors. They think it's about money and the
mm-hmm,
startups and pulling their dreams. But it's building a company is like a marriage, and it comes with a lot of strings attached. And you have goals, you have things that you have to do, and you have a lot of compliance. These things are very important. And more experienced entrepreneurs, they know that already. So they know the right
mm-hmm,
actions to do, and they know the right partners they want. So when they are looking or they are choosing their
mm-hmm.
the VCs they're after or the investors they're after, they're they change how they search. It's not only for money. And it's not about this conversation of smart money than money. Because this is actually something it's more like a cliche than actually a truth. Smart money for one is not smart
Mm-hmm.
money for other. It depends on the investor, it depends on how the investor can leverage his network for that entrepreneur or for that company.
Okay.
Different.
So to go ahead, can you share your golden rules that compels, the compelling pitch deck that resonates with the investors? if we talk about a stern golden rules that entrepreneurs should follow?
Yeah, well, I would say that the golden rule is to have everything neat, organized, and have a plan that it's understandable and that makes sense. Um, Besides that, there's no golden rule. It's not a slide or page deck or something like that. You have to put there. Uh,
Okay.
Maybe the golden rule that I would say is that be as direct and succinct as possible.
Mm-hmm.
And I think that's the best way to get attention of the reader. If you're trying to get attention of the reader in a cold mail, for example, don't send something that has more than 100 words for someone. Someone that doesn't know you won't spend the time to read something more than that fits the screen of the phone. If they have to roll, they don't know you. They won't do that for you. So you have to get their attention in the screen. So, and it's not
Mm-hmm.
for me, it's for everybody. So if you have to get their attention, put that on the screen. If you couldn't do that, you lost your email. So in fact, golden mails doesn't really work. So that's a kind of golden rule is don't write big names, just like explaining whatever your company do, because people just won't read.
Yeah. Well, to think of a career in a venture capital, what do you think of how much fortune one could make?
Sorry, didn't get it.
I'm saying, okay, how much fortune do you think one can make if people comes into this industry of venture capital, or how intriguing this industry is to be in earning fortune?
You say the entrepreneur or the investor?
The investors,
The investors can
the
make
career.
the investors can make a lot less money than
Hmm,
entrepreneurs.
okay.
That's one thing is for
Uh,
sure because
yes, pretty much.
yeah, it's counterintuitive, but yes, that's how it works. The economics of fund is pretty harsh, and and venture capital is more stable once they get going than a
Mm-hmm,
startup. But hitting hard as a venture capital doesn't yield as much as hitting hard as a company. Hitting
mm-hmm.
hard as a company, you make you a lot more than venture capitalists.
Okay. Uh, like talking about how can venture capital industry foster like greater diversity and inclusion among both investors and entrepreneurs? What kind of diversity and inclusion it can bring in?
I'd say that investing faster it really isn't a thing or a
Mhm,
KPI that one should measure because investing faster it's could bring it to adverse selection. So don't do it. Uh, Same thing happens if you get a quota for something and you invest
mhm,
only on something. Uh, you may have returns that are not really good for that, and you may kill your business. So it's tricky as well. However, the industry itself shouldn't be investing only in a specific uh, demographic. If you look at, for
mhm,
example, the demographic of the good of the decks that comes up, and on the top of the funnel and the bottom of the funnel,
mhm,
you'd say that statistically, if every deck it has the same potential to go down and become a unicorn, you should have the
mhm.
same proportion on the top and the on the bottom of the funnel. What happens is some demographics statistically have a higher percentage of getting on the other side. So if you're doing this professionally, or if you're doing this trying to get your best returns, sometimes you have to follow the statistics. So, and sometimes that goes against one demographic or one. Now,
Okay.
there are some people who are specialized on going to underdogs or under the radar kind of companies. That's something that I do. I don't like, for example, to go for high-tech companies. I don't like
Mm-hmm.
to go for companies that were only founded by Stanford guys, McKinsey guys, because these kind of companies, first and foremost, they are more expensive in the beginning. Um, they don't actually have a good um, non-zero proportion. They tend to be zero if they fail, uh, things like that. And I prefer like real entrepreneurs that come from below because I can help elevate them. Because this is something that I can do and help them.
Mm-hmm.
If you have a feature, if you have a skill that you can help this, uh, let's say, underdog here to become the norm, you should invest in him because you're gonna bring him to the mean, and by doing that, you are highly appreciating your assets, and you're gonna have a lot of return on that. So that's
Mm-hmm.
one way you're seeing that. But if you're not touching anything, you're just putting money here and there. You gotta choose the dots that are above the curve, and not should touch any dots that are under the curve. So it's kind of a strategy.
That pretty much of a valuable insight. So coming to the end of this talk session, what are your predictions for the evolution of venture capital landscape in the next 5 or 10 years?
Let's say that more 5 to 10, you're
Mm-hmm.
gonna see you're gonna see a lot more like democratization or a lot more emerging managers coming up in here and there because
Mm-hmm.
it's gonna be easier for managers to raise their funds or to have more access to capital. And you're gonna see a lot of people who have done good investments, and they're gonna raise again because they have a portfolios and said, hey, remember me? I had this micro fund, and I have done this very well, and I'm gonna do it again. The same that happened with the startups like 10 years ago or so. The first startups they started, and they went well, and then a lot of startups started coming up. Some of the venture capitalists started doing well. So the cycle of venture capital is longer. It takes like
Mm-hmm.
10 years. So after 10 years, so it's maybe like 2025, people who invested well will start getting exits, they will start returning money, and there will be more people who had very good stories to share. And this asset class will be more knowledgeable for everybody. So I think there will be a more people uh, investing, and this in turn will spark uh, some technologies that will help them doing this in scale, and then you see a lot of venture capitalists all around the world, a lot more, not too concentrated.
Mm-hmm. Okay. Thank you so much, Mr. Cooper. It was pretty enlightening and fruitful conversation with you. I truly appreciate the insights that you have given and the feedback that you have provided throughout. It was pretty much insightful and pretty appreciative. Thank you so much. Thank you for your time.
And I'm sorry about the bad connection. We had it's solved at the end, but again, I hope if everything was caught in the recording. If you have anything that you need as well before writing the article, I can help you getting advice, clearing
Yeah,
them.
absolutely. Thank you
Okay.
so much. Thank
Thank you,
you.
Gargi. Thank you, Amin. Bye bye.